Hello, everyone, and welcome to another episode of the AI Cash Grain podcast. I'm Satish Nandapurkar, Director of Data-Driven Strategies for Quantum Hedging, and today is October 11th. As always, a little disclaimer. We do recommend futures and options. Sometimes the risk of loss in trading futures and options can be substantial, and each investor and or trader must consider whether this is a suitable investment. Now, with that, let's review this past week. Corn and beans were both down. Corn was down 9 cents to 415.75. The Nove beans were down 32 cents to 1005.50. First, as always, we'll go to Cy Monley, and he'll talk about what's going on in the market and what the traders and more fundamental guys are looking at. Then we'll go to Kevin McNew. Kevin started looking at March corn and the January soybeans. And in the short run, he doesn't see much happening, but in corn, he does. The models do seem for March corn to be going down a little bit, and for January beans to be going up a little bit. So, but in the short run, models are going kind of sideways. And given that we're really near the end of our program, the benchmark program that we have, we're 85% sold in corn, we're 85% sold in beans. And the recommendation this week is to hold in both cases, not to sell any more of your crop year 24 crop just right now relative to our benchmark. So with that, I'm going to turn over to Cy. Cy, we've kind of been chopping around a little bit. This week was a down week. What do you think?
Thanks, Satish. I think this week it's pretty short and sweet. We continue to have harvest pressure. Weather looks good in Brazil. Kevin's been reporting that our bean yields look better, and lack of demand. I think the path of least resistance for both corn and beans is down. As the U.S. farmer loses their insurance put essentially here for the next 10 days, they're going to be forced to put hedges on and either sell or put some protection on again. So I think going the next 2 weeks, unless we see a major global hiccup for some outside forces, the path least resistance is down. So yeah, it's get your hedges on and kind of wait it out. Kevin, do our models say anything different?
Thanks, Cy. This week really didn't give us much directional bias that differs from what we've had really for the last few months, and that is flat to maybe a little rally in beans and flat to a little lower in corn. And that's where the model is today. Yesterday or Friday's USDA report was kind of maybe a little surprising in some ways. We have been seeing pretty strong bean yield numbers. From our harvest results, we're about 30% of the farms. We usually get about 10,000 farms in from the season. And this year, we're about 30% of those farms are reporting. And soy yields are definitely strong. So I be honest, I haven't looked at the state by state breakdown numbers where they kind of lost a little bit of yield, but I can tell you the top 5 states that we've seen, top 5 soy producing states are all doing really well. For corn, that's not quite so true. And so still a good corn number. I wasn't too shocked that, both numbers maybe moved a smidge, but I think November could be more of a telling sign of where the yield lands because we'll be probably pretty well wrapped up by then, or at least close to wrapped up. So, as we sit here today in kind of mid-October, the heart of harvest season, just not a lot really to kind of change the perspective as we move forward. For March corn, probably 430 to 420 is probably where our expectations are as we look for the balance of the calendar year. For beans, again, the soy yields, I think the trade was definitely looking for a reduction in soy yields. We were not. We thought they would be flat to higher, and that's what got us a bearish move on a slightly lower grade down. People have been expecting yields for soybeans to be quite a bit lower because of the late season heat. But again, we're not seeing that in the yield data that we're seeing. So we still kind of believe what USDA is printing in terms of a large carry out. And, probably not much hope for that changing in the next 30 days as we move forward. So that's where we're at. Turn it over to Satish.
Thanks, Kevin. With respect to recommendations, again, the recommendation this week is to hold both in corn and beans. And we are near the end of our program. The goal with our program was to beat our benchmark, which was a predetermined strategy of selling an increasing percentage of expected bushels each month end from January through October. The way we were going to beat was sometimes by being oversold or being undersold relative to that benchmark. Currently, for corn, we are even with the benchmark at 85% sold. The benchmark is at 85% sold, but because we got oversold back in the summer, we have a better average price. We're at 443. The benchmark's at about 432, so we're about 11 cents ahead. We're currently neutral with the benchmark, and thus we're tracking to about a 9.5-cent outperformance when the program ends at the end of this month. With respect to beans, we're also 85% sold. The benchmark's 85% sold. We got a little oversold in the summer, which helped just as the market was dropping. We probably should have stayed oversold a couple more months, as I've mentioned a few times, but the models just didn't point to that. So we are right now at an average price of 1093.50 versus 1087.90 for the benchmark. So we are ahead of the benchmark, but we're tracking to only about a 4.8 cent beat versus the benchmark. Still good, but not as great as we had hoped for. But certainly with the corn, we've done, I think, quite well, right in line with where we thought we were going to do. So finally, just a quick summary and recap of today's podcast. Both corn and beans were down. Corn down to 415.75. The no beans was down to 1005.50. Cy talked about how the path of least resistance for both corn and beans, in his opinion and traders' opinion, is probably to drift lower, to go down here in harvest and with insurance coming off. Kevin talked a bit about now that he's switched his focus, the model's focus into March corn and January beans. Kevin talked a little bit about how corn is slightly bearish, March corn is slightly bearish, but January beans is actually slightly bullish. So he deviates from Cy's view with respect to beans. But here we are at the end of our program. The program, in both cases, we're 85% sold. We were waiting for more data to come in. And so the recommendation this week is to hold. I don't see that recommendation changing. I expect we will be giving out sell the rest at the end of this month, at the end of October. But just in case something happens with the data, we have some move. We're continuing to watch the data to see if we should do that in advance at all to take advantage of a potential move down. So again, thanks for listening. Thanks for being a subscriber to the AI Cash Grain podcast. We will be back here next week again. See you.